Joining us now in the market, Sarat Sethi, portfolio manager at DCLA and a CNBC contributor. Sarat, always good to have you with us. Just your take, I know you're not in it, your take on the Starbucks news, getting Brian Niccol, a master operator, one who's, seen his stock go from 6 to 50 plus in the matter of his tenure.
I think it's a great move. I mean, Brian's done a phenomenal job. He's turned around the company. And I think this is a great new way for him to kind of get at something that needs to be turned around. I mean, we all know Starbucks has a lot of work to be done. Mm-hmm. And unfortunately, the last 2 years, it didn't really do well. So I think it could be a good opportunity there. There's a lot of low-hanging fruit at Starbucks.
Yeah. The other big story of the morning, of course, is Home Depot. Disappointing guide, even though Wall Street pretty much reset expectations going into the quarter. What does this tell you about some of the earnings that we're expecting?
It's just confirming what we're seeing.
Yeah.
We're seeing the consumer slowing down. Retail sales are coming down. You've seen it across McDonald's. You saw Starbucks. All these other companies are reporting. So I do think you're seeing that. At the same time, you're seeing PPI number today, CPI. So it's confirming what the Fed needs to do, which is basically start cutting rates. The big question is the Fed going to be cutting rates for the right reason? And hopefully it's more because inflation is coming down, not because our economy really needs it more.
When you listen to economists and they're pulling forward it sounds like their hair's on fire and they're going to be cutting for the wrong reason. But in your view, what is the reality? What is going to happen in your view? And for what reason?
I think you get 25. I don't think you want to scare people to say, wow, things are a lot worse than they are. But if inflation's coming down faster than, which I hope is retail sales and the consumer, then I think the economy's in a better place.
There are a lot of people in the market that think the Fed missed the boat in July, that they should have cut. What do you think his message might be in Jackson Hole?
I think listen, we can't be that reactive all the time. We know they've been pretty much saying we are going to be cutting. So if they do it now and they're going to do it after we get this volatile 9% correction, I think they're just going to be data dependent at that point. And also they're just respective of the election coming up too. But I think they're on the right path. And if they went to 50 or they cut last week, I think you'd see the market down a lot more than it is today, just because of the reaction of they're seeing more things that we're not seeing.
Yeah, more volatility into the election?
Absolutely. I mean, when you get slower earnings, you've got companies that are going to miss, and then all of them are going to guide down. We've seen that. The guide down for the next couple of quarters is pretty wide now. So I think that's where valuations are really going to matter. And I think some of these, even Starbucks at these levels is still trading at 25 times earnings. So what are you stepping into in terms of depressed earnings versus true valuation? I think, and the other part is dividends. Right. Dividends are going to start mattering because as you see interest rates coming down, that's where you want to be.